scrutinizing their trade data and financial records. However, as the business environment has evolved, along with significant legal and technological advancement, it is increasingly recognized by regulators that market manipulations and unethical practices extend beyond mere trading activities. And today we have selected this topic because of the capital market is booming. Index is touching new height. It is 73,000 plus the BSE index, and shortly it can touch 74,000. And the way things are moving, so definitely when market capitalization is touching 4.3 trillion, so you can understand that what will be the impact. The more and more people will come, more and more investor will come. Today we have more than 10 crore demat accounts, which was earlier it was 3, 4, 5, 6. During COVID, it has increased. So you can understand, and that's why we have selected this topic. As you are aware that we are conducting every week webinar on 4 to 6 on Friday. So this is our efforts that how we can bring out the new topic, new things, and the relevant things for the corporate India. So our program's focus is more that how can we bring out the best faculty, best topic, and then give some value addition to our participants. So friends, because of this, the growing awareness and deceptive practices often originate in the preparation of financial statements and the overreaching governance structure. Consequently, the regulatory emphasis has shifted towards examining these governance practices to entities involved in securities market, including their conduct in financial reporting, disclosure, and beyond. The evolution reflects a broader legislative and regulatory adjustments, empowering authorities to prove into the integrity of financial statement, the truthfulness of the entries, corporate transactions, related party transactions, and the dealings on multiple things and acquisition, and other material information which is impacting the market price and accordingly affecting the investors' interest. Such comprehensive investigation now extend to assessing the governance framework of companies, particularly when red flags arises regarding the financial dealing or governance practices by anybody, by the whistleblower, by the professionals, those who are working in the company, and the independent directors, and the market at large. So today everybody is realizing that governance is the crux, and nobody can take that risk that governance connected with the compliance also. Today, what is happening? The first step of governance is compliance. So now today we are reading the other few companies which has not followed or which has done something wrong, or some wrong news has come in the market. You have seen the market capitalization is drastically reducing. So the point is, sometimes we say compliance is a cost, but non-compliance is a disaster. So you can understand today investors are realizing that what is the pattern of this company's management policy. And the compliance is the first step to judge the management quality and their intention. So if you are a compliant company, you follow this. And that's why the investigation is also taking place when you are not complying something. This is a trigger point. So friend, this is the insightful webinar developed upon the dynamic landscape of SEBI's regulatory framework and investigating methodology. What we will discuss today: overview of traditional investigation strategy followed by the SEBI, shift from traditional regulatory and investigative paradigms towards a more nuanced approach, leading to a change in the investigating trend, because technological is lots of things, lots of technological advancement is taking place. And then you can understand what is happening. The wrongdoer is faster than the regulator. So regulator has to faster than the wrongdoer. They have to not the reactive, but they have to realize that what types of fraud people can do, and they have to be more and more alert on this. Then projection for future regulatory direction and trend in oversight. And then we will discuss some international trend also, that how other jurisdictions are using. So today we have invited the galaxy of speakers, and the two speakers which are very important, and Nehal is from industry. Mr. P.K. Nagpal first. Mr. Nagpal is an advocate in practice, enrolled in Bar Council of Maharashtra and Goa. It has been a SEBI for 31 years since its inception, and superannuated as a executive director. He was there when SEBI came into existence in 87 and then 92 when it's got a legal recognition. He has been all along involved in formation of implementation of policy, regulatory framework of SEBI. He was on the board of NISM and was nominated as CEO of Central Listing Authority during 2004 and 5. He chaired the study on money laundering through security market in Eurasia countries as part of the regional forum of FATF, and has also served as chairperson of standing committee of ISCO and various committee of regulator in the financial sector, SEBI, RBI, IDA, and PFRDA. Currently, he is acting as a consultant and legal advisor in the financial sector, and he was in charge of the investigation division also in the SEBI. So his wide experience, where he was involved in the policy making as well as the investigation and various other things, it will be pleasure to us to listen to him and his experience. I welcome Nagpal sir for this program. Then we have Mr. P.K. Vindilesh, another stalwart of SEBI, who has he's a former CGM SEBI, he's a rank holder, chartered accountant. He possesses over 42 years of broad quality experience in corporate finance, regulatory, investigative, and adjudication functions. During his tenure in SEBI, he had headed several departments and was involved in framing regulatory policies and investigation and adjudicating market misconduct in securities market. He has made a number of presentations, delivered talks at various national and international forums, and led a training program of emerging international security regulator. He has been the member of various committees constituted by SEBI, RBI, Ministry of Finance, MCA, International Financial Services Authority, ICSI, ICI, and ISCO. He is presently providing advice on securities law and financial strategy. He is also sitting on independent director on board of reputed companies. I have interacted with Mr. Vindilesh so many times, and I have found that his economic understanding and the market understanding is phenomenal. He's a chartered accountant by profession and economics student, and he has used this two deadly combination when he was working in SEBI, and he has come out with so many things. The delisting guidelines, reverse book building delisting guideline is his brainchild, which he has come out, and he has given various suggestions, and he has come to our forum at so many times. So I welcome Mr. Vindilesh, sir, for this program.
Thank you.
Then we have Nehal Shah. She's Company Secretary and Compliance Officer, Care Rating Limited. She has worked on various critical projects such as due diligence advisory for new projects, including M&A, right issue, setting up subsidiary, transfer of business, selling of business, etc. at group level. She has been awarded with Compliance 10 by 10 on 10 excellent performance in 2015. And recently also she won various prizes on compliance. She is from the industry side, and what is her view on investigation, the advice to the corporate, and the point of view of the corporate, she will cover. Then we have Mr. Ravi Prakash. He is Associate Partner, Securities Law and Corporate Litigation, Corporate Profession. Ravi is handling the investigation matter, appearing in SET, appearing in SEBI, and then making research paper, working out, advising client on various investigation issue, and no doubt he's other side of the table. So we will listen from his side that what SEBI is doing, how he is feeling, what are the things, and how it is moving. So friend, before I just give a preliminary introduction of this topic, I will request, because we have come out our new book on Handbook on SEBI LODR Regulation 2015. So I'll request Vindilesh sir and Nagpal sir and Nehal, please launch this book, because this book is ready in the going to the market, so we can't wait for this. So I request all three to just give a bless and Shivam, you can just open it and tell us about this book. So this book is SEBI LODR Regulation 2015, updated up to 1st February 2024. Shivam, can you just tell us
Yes,
about the, yeah.
thank you, sir. And thank you, Nagpal sir, Binli sir, and Neil ma'am, to release this book. So I am telling about the USP of our new publication on a handbook on the SEBI LODR Regulation 2015. So USP of this book is that all the relevant text at one place. Like if you want to see SEBI relevant circular or relevant schedule or relevant FAQs or clarification issued by the stock exchanges or referred provision of other laws and reference of informal guidance. Everything is placed at one place at after just ending of the regulation. So I am giving you the demo of a regulation, that is regulation 23 relating to related party transaction. So at every starting of the regulation, you will find out this highlight of the regulation. So what is the enforcement date of the regulation 23? What subsequent amendments has come in regulation 23 and the enforcement date of that amendments. Other regulation of LODR has been referred in that regulation. Referred provision of other law, like in regulation 23 you can see regulation 31 and section 31 of IBC and section 2 clause 45 of Companies Act has been referred. Apart from that, SEBI circular which is relevant, we have given in this box. Then regulation will be texted here. After ending of the regulation, every reference material is placed at the end of the such regulation, like a circular issued by SEBI, then circulars issued by stock exchanges. There is six circulars has been issued by BSE and NSE. Then a referred provision of other laws like Section 31, what I have said earlier. And then at the last, informal guidance, which has been issued under this regulation only. So, what are the other key features of these books? Was the first division. Division. There is a total five division. So other key feature is that if you want to see ready references relating to corporate governance, disclosures, compliances, you can see here in a separate division. Like if you want to see what can be the board structure of a company, you can see that reference in that corporate governance division. Apart from that, a separate division has been incorporated in circulars and format form, and a separate division on informal guidance. Every informal guidance has been placed in every regulation. Apart from that, year-wise regulation has been placed in separate division, and sample policies of top listed entities has been given. So this book is in separated in five divisions, and there is a rainfall spot in the forage of the book. So this is the USP and key features of the book. Thank you, sir.
So thank you, Shivam. Thank you. So our learned speakers will get this book at any time because we have already sent. So you'll get. This is a interesting book. Now, Shivam, please just I'll just give a the evolving regulatory landscape and investigating trend. So the all other speaker will take advantage of this presentation. Shivam, just open this, please. So friends, the point is fraud in securities market is what? The fraud comes into two ways. One is fear and greed. Stock market is game of greed and fear. Uh, Greed, make more money by any means. Fear of loss of getting caught. So, lobha papasyam karanam. So, you can understand the pap ka karan lobh hai. So, this is the main issue relating to uh, market fraud. Now, what are the types of security fraud? I'll give very brief introduction because this presentation we'll send it to all of you. Intermediaries fraud, the research report, investment advice fraud, unauthorized trading, dabba trading, co-location trading, front running. Then trading frauds include market manipulation, insider trading, circular trading, price volume, synchronized trade, LTCG fraud, reversal trade in FO segment, company fraud. They are connected to illegal fundraising, IPO fraud, Ponzi scheme, GDR, accounts manipulation, misgovernance. So these are the categorization of Indian security market fraud connected to each level. So intermediaries fraud is connected to all brokers, sub-broker, RTA, and other intermediaries. Trading fraud, anybody can do. Okay, company fraud, where company is involved. Okay, so now common reason for fraud is they are not detected at early stage. The reason is diminishing ethical value, poor governance, ineffective internal control system, compliance in letter, not in spirit, high volatile securities market because the market is going up, volume is taking place, so nobody bothers about all these things. But these small things creates a big problems in future. Lack of investor awareness and activism, and the lack of protection for whistleblowers. These are certain the common reason which are not able to detect the early stage fraud. If you see the timeline, since first fraud on security market came when the SEBI came into power as a statutory body itself in 92 when Harshal Mehta fraud was there, then circular trading, then account manipulation, then illegal fund, GDR, NSCL scam, Ponzi scheme, synchronized trade, LTCS, co-location, and unauthorized trading. So these are the pre-COVID era. And then this is only an indicative timeline. Actual number of fraud in each category are much more. So post-COVID era, if we see, then insider trading, Infosys case, IPO allotment case, pump and dump case, front running case, these are the recent cases which has taken place. Now, if you see the Harshal Mehta case, in this case in 92, the price volume, insider trading, ballooning, BSE index, bank fraud that was there. So bank fraud was the main, price and volume and insider trading, that was a the law was not strong, and it has more than 24,000 crore public issue, public money has siphoned on this. Then in Ketan Parikh case, next, the Ketan Parikh case has taken place in 2001, where price volume rigging, circular trading, front running, and the BSE index crashed, and large scale loss to the investor, institutional investor, and insurance company and mutual fund, which we have seen. Then front running, the meaning of front running is that what you are buying or selling, first you are purchasing, and then you are purchasing on behalf of your organization. So that is also, so investor were cheated by intermediaries because you are aware, so you are taking advantage of the insider information and doing this. So in SDFC mutual fund, Vijay Vishal Shah case was very popular in this. Then in Satyam Computer, there was a company fraud where they have overstated assets, manipulation accounts, siphoning of public money, false disclosure, misgovernance, and huge public money lost in this, and investor confidence is also lost. But in this process, government has come out very heavily, and they came out with the various suggestion and introduction of companies of 2013 is the main focus on Satyam related things, and they have changed the various law. Then in 2010, Sahara fraud was there, where they have illegal money collection, circumventing provision of public issue, non-disclosure and false disclosure, diversion of fund, and repayment of default. 24,000 crore rupees has raised from 3 crore investor. They were a small investor, and this is one fraud which has created a havoc in the Indian market. Then GDR fraud in 2009 to 2013, where forcing a non-genuine offshore GDR, making false disclosure, ballooning the market to lure Indian investors, and creating an intricate web of entities in siphoning an offshore location for multi-layer transaction of the fund before bringing them back to India. Mean there are few companies they were doing, and everywhere you will find these types of companies. Then come to Sarda Group financial scandal. That is also Ponzi scheme fraud was there. The collection money from low income and assured return, embezzlement, investor money, and repayment default. So 20 to 30 billion was lost by the 1.7 million investors. And that's why SEBI came out with very heavy Ponzi schemes law, and collective investment scheme law has come in this. Then come to the National Spot Exchange fraud, that is a payment default 2013. Here also fraudulent trading in commodity, excessive short selling, false reporting of the regulator, diversion of fund, default in payment, and that was the reason, and the fraud led to closure of this exchange in July 13. And trade settlement norms were changed after NSCL scam, and SEBI replaced FMC as a commodity market regulator. So previously the commodity market regulator was managing the commodity exchange. Now SEBI is managing. Then come to the 2013-14 IPO fraud, where sham IPO of corporate action, wrong and corporate action they have mentioned, manipulation of accounts, they have shown high profit, diversion of IPO proceeding for which they have taken money, but they have diverted to other group companies, conversion of unaccounted money into legitimate market, price volume rigging, and dumping the inflated shares in the hands of small investors. So the impact was this: investor lost money as well as confidence in the primary market. That's why you have seen in this IPO fraud 2013, so many years IPO market was in doldrum. Then come to the PACL this India Limited scheme, that is also Ponzi lend scheme, where they have collected money from the low income group, assured returns, siphoning of collected money, a repayment, and more cost transaction. You can understand they have collected 49,000 crore, and then SEBI came out heavily on Ponzi and unregulated scheme. Then come to the synchronized and reversal trade in offender segment in 2007, 14, 15, where non-genuine reversal trade, price volume rigging, conversion of unaccounted money into legitimate money, and this was because of LTG. Stock market was used platform to tax evasion and manipulation of book. So revenue loss was there, and market integrity was also affected. Same LTCG penny stock fraud also taken place in 2015-16, where the same IPO and corporate action, misuse of SME platform, diversion of IPO proceedings, circular trading, price volume rigging, conversion of unaccounted money, and stock market used as a platform. So revenue loss as well as market integrity was affected. Then come to the mass trading, in mass insider trading 2017. So leaking the insider information, spreading fast steps to the do front running. So first you have given the wrong information, then you have purchase or sale shares reverse to this. Inside and market manipulation it has done. So price discovery was distorted in this, and investors were cheated in secondary market. That has happened. Then come to the co-location scam, where the providing preferential treatment to the broker, where their trading is taking place faster and fast as compared to normal things, and that's why the disclosure market price information to few brokers and facilitated market manipulation through front running and various other things has taken place. So this has created a illegal cartel and loss of opportunity to other broker and then investors in this case. Then unauthorized trading in 2019. So that was a Carvey stock broking scandal. The misused client fund, unauthorized trading into clients' accounts, investor lost money, investor lost faith in capital market as well as market intermediary, which has taken place. Then come to the CNBC Awaaz stock 2020 case, where pre-market show recommendation and then synchronized trading pattern, unfair trade practice, booking profit for multiple trading account, and pattern of pump and dump manipulation. So here they were giving the information, and then they were before giving information they were doing the reverse transactions. So either they were buying first and then telling other investor to buy, so they are buying, so their investment which is at a lower price is getting more money, and then they are selling. Then come to the Sapunji Palanji's company case, which is conversion of NCD to term loan, failed to submit necessary document to the venture trustee, non-updation of website as per LODR, non-adherence of corporate governance norm. And this is created an uncertainty in investors' mind and potential financial loss to investors in this matter. Then come to the Arshad Varshi case of pump and dump case, where creation of misleading messages in company was announcing or through some other people wrong messages that company is doing this, which was not the company was not doing. So small investors induced, they were doing and a spurt in trading volume and then they were selling and profit booking. And this is the pattern of pump and dump manipulation is taking place. So loss to investors and subscribers and distorted price recovery. Then recently in 2023, BAP chart, there's another fraud was there where unregistered the financial influencer was there. They were saying buy, sell, hold recommendation security market to client under the guise of providing course related to security market, assurance 100% guaranteed return, and unnaturally high degree of certainty, return profit guarantee, recovery, and loss to various people because of they were giving recommendation. So loss to the investor, unrealistic expectation of the market, and then they lost this. Then B business experts case, which is also buy, sell, hold. Here also information sharing in advance, and then trading activities in expert aligned with the stock market recommendation, connected with entities started front running such recommendations. So this is a combination of various things which I have explained to you. Again, it is also lost to the investor and subscribers. Now, friends, these are some fraud I have told you, but what is the impact of these frauds? The impact of this, number one, loss of public money. So this is public money is losing. So this is crime against the public at large. Then secondly, loss of investor confidence. Investors do not return to the market, and we have seen whenever there is a scam has broken out, then investor is run away from market for 7 to 8 years. And this is one of the biggest reason of India was not growing at the way it is growing now, because the SEBI is tightening this and the regulator is very active now. Market do not reach full potential, undeveloped equity cult, because today we have seen that 2:1 is debt equity ratio. If this debt equity ratio mean 2 loan which bank is providing, 1 you have to bring out equity. So if equity cult is not created, then you cannot meet out this, and the entire burden will come on the banks, and that is a cost is high also, because the company has to book the interest cost and pay the interest cost, and so many projects are coming into default because of this. So equity 2:1 is one of the wonderful concept. Then loss of overall economy of the nation, weak market diminishes economic confidence. So if this is happening, then when investors are not coming, equity is not coming in the market, then it is a overall economy loss is there, and that is a very I think this is a criminal activities. Investor perception of the market gets hurt because stock market views as a speculating and gambling arena, and people think it's a den of speculation, which is not the correct position if everything is in a proper and in a structured way. Revenue loss, stock market misuse as a tool of tax evasion, and temptation to fraud increase. So the point is, at last, one point is coming. If he can do, why can't I? So that is one part, and people think he is not caught. So how I can caught? So this is the impact, and this is the all fraud which I have narrated. I have not given in detail. So this presentation we will upload on our website and we'll send it to you, and you can choose. So Nagpal sir and Midlesh sir and Nihal, I have given the overview on all frauds, and because of these frauds, what are the changes that have taken place. And now I'll request Nagpal sir to tell us about your experience, your aspects as a regulator. Now you're on the other side of the table. So what you think, why these frauds are taking place, what are the issues, and anything related to this. You are a very well experienced regulator, and your word of wisdom will be useful for everyone. Over to you, Nagpal sir.
Thank you, Pavanji, for inviting me to participate in this webinar. I shall just explain in brief how the investigations are carried out. You have already covered different type of frauds which are happening in the market, and how SEBI captures such frauds, and what is the methodology being followed? First of all, I would say investigation is simply a fact-finding exercise. When SEBI finds that certain transactions in the market are being carried out which are detrimental to the interest of investors, or certain intermediaries and market participants are violating the provisions of the SEBI Act, Depository Act, Security Contract Regulation Act, then SEBI initiates investigation. SEBI appoints investigation authority, who is the senior officer of SEBI, and SEBI gets such information about the market misconduct from the Integrated Surveillance Department of SEBI. This department monitors the volume and price of different securities on day-to-day basis in coordination with the stock exchanges. While the stock exchanges are the first line regulators, Integrated Surveillance Department, they also monitor the transactions in the market on daily basis, and certain alerts are generated because of the software system developed by them, and in coordination with the stock exchanges, if they feel that this matter requires further investigation, they refer to the investigation department. Now, investigation department gets most of the cases from the surveillance department. They also get complaints from the market, and many times there are media reports highlighting the frauds happening in the market. And the investigation department carry out the further investigation. Now, how to carry out the investigation? Section 11 of SEBI Act empowers SEBI to carry out investigation. And similar provisions are there in the Depository Act and Security Contract Regulation Act. Now, investigation authority, it collects the information from the entities involved, which have been highlighted in the surveillance report. And they also collect information from depositories on the demat accounts, how the shares have moved from one entity to the other. They also collect information from the exchanges about the transactions of various entities and the manipulative pattern. And they also collect information from the banks. That information pertaining to movement of funds among different entities who have been involved in the market manipulation or front running or insider trading. That information is also collected. SEBI can also collect information from different other agencies. And sometimes if entities are based in other countries, then SEBI has the memorandum of understanding with the regulators, security market regulators, under the ISCO agreement and bilateral agreements. Under those agreements, SEBI collects information about those entities which are based in other countries, and then SEBI concludes the investigation. Now, during the investigation, SEBI can also suspend trading in a particular security. SEBI can also freeze the demat accounts, bank accounts of the entities involved. And after the investigation is concluded, then further action is decided based on the evidence available. So entire exercise of investigation is fact-finding and collection of evidence, because once SEBI passes any order based on the findings of investigation, then appeal is filed before SAT and the Supreme Court. Now, SEBI has to prove the case at every forum. Therefore, the entire focus of investigation is to collect the evidence which is acceptable in the court of law. Now, if after the investigation, SEBI finds that evidence is not adequate, SEBI may close the matter, or SEBI may issue advisory or warning letters to the entity if the violations are not serious. And if violations are serious, then SEBI can impose monetary penalty by referring the matter to a separate adjudicating officer. He is also a part of SEBI, but he is a separate authority. SEBI can also debar somebody from the market, from trading in the market and accessing the security markets. And SEBI can suspend or cancel the certificate of registration of any market intermediary by passing the orders. Now, during the investigation, many times it happens that the entities don't cooperate with SEBI. Then SEBI issues summons under the SEBI Act. Under Section 11, different subsections are there. And the language of the summons is that if you don't provide information, SEBI can impose penalty, which may be up to 1 crore of rupees and maybe 1 year of imprisonment. And if the violation continues, then penalty will be 5 lakhs rupees per day till the time the entity provides information. So SEBI has wide powers under the SEBI Act to collect information and conclude the investigation. Now, after the action is taken, sometimes SEBI finds that violations are so serious, and to prevent further manipulation in the market and further wrongdoing in the market, SEBI may also pass interim orders by debarring the entity from trading in the market and freezing their demat accounts and bank accounts and till the time of conclusion of investigation. Once interim order is passed, then SEBI provides post-decisional hearing to the entities, and after granting them hearing, SEBI passes the final order. Now, if entity comes back to SEBI within 21 days and they prove that they were not involved in the manipulation or any wrongdoing, SEBI may revoke the order within 21 days also. There are a number of cases where SAT has said very clearly that interim orders should be passed only in case of urgency. Many cases when SEBI passed interim orders, SAT has set aside those orders because by that time, 3 to 4 years from the date of violation, 3 to 4 years were already over. And SAT said there is no urgency. Now you conclude the investigation, then you pass the order. And so therefore, last year, if you see the annual report of SEBI passed only 12 interim orders. Though interim order is a very effective way of regulating the market and to prevent the wrongdoing in an urgent matter. But SEBI must have adequate evidence and action should be very prompt so that it should stand the scrutiny of law before SAT and before the Supreme Court. Now, another way of regulating the market is that if SEBI feels that certain entities may destroy the evidence, then SEBI may carry out search and seizure proceedings after taking approval of the court. So search and seizure can happen only after approval of the court. Now, you must have heard that very well-known WhatsApp case where SEBI had carried out search and seizure and passed orders imposing about 15 lakhs penalty on different entities. But when they filed appeal before SAT set aside those orders because SEBI could not prove the origin of that information. Certain companies, before publishing of the financial statements, so there was some leakage of information. And many employees of the brokers, they forwarded those messages on WhatsApp to other entities. They traded in the market. And But because SEBI could not prove the origin of the information, set aside the order. And according to publicly available information, SEBI also carried out such a search and seizure operation during 22-23 and passed further orders. Now we have to see whether they will stand the scrutiny of law in a due course of time. We shall come to know about that. Now, as Pavanji said that the way of manipulation in the market has been changing. Earlier, there used to be price and volume manipulation, circular trading, matching of trades, and financing of transactions through the stock exchange mechanism. These type of violations were happening. Now, because SEBI had taken a number of actions and passed orders, and which have been upheld by SAT and the Supreme Court, now maybe different entities may be changing their focus on market manipulation in different manner. So many investigations of SEBI now pertain to financial statements, violation of related party transaction norms, front running, and if you see the last annual report of SEBI, there is a sudden jump in the insider trading cases. There are about 85 insider trading cases which were taken up for investigation. I remember that about 10 years back, 75 to 80% of the investigation pertained to market manipulation. But in 22-23, I find about 50% investigation pertain to insider trading. One reason may be that once the new regulations were notified, the definition of insider trading is very wide. Now, even those people who are not connected, but they have got inside information, they will also be considered insider and they will be guilty of insider trading. And it is likely that out of 85 cases, many cases may pertain to non-disclosures or the trading during the trading closing window. And they may not be cases based on unpublished price-sensitive information, but this may be of other technical violations of the insider trading regulations. Likewise, front-running cases number has gone up. And as Pavanji also explained that many entities are indulging in front-running, and SEBI has passed orders against the fund managers of some of the mutual funds. And so this is the trend. And now, because the financial statements violations, related party transaction violations are also happening, now there is a separate department in SEBI, Corporate Finance Investigation Department, which carries out the investigation of similar matters. And so this is the trend in the investigations. Now, a few points I should like to mention that one, as I said earlier, that interim order should be passed only in the very urgent type of cases where evidence is adequate, and it should be immediately after the violation or immediately after SEBI finds the violation, not after a certain period of time. Otherwise, SAT is not going to accept such orders. Now, other point is that the speed of investigation. Now, if investigation is delayed, final action, final quasi-judicial action is also delayed. And as I said that SEBI may initiate civil action under the Section 11 of SEBI Act, or it may initiate adjudication for imposing monetary penalty. And in case of serious violations where entity has got ill-gotten gains, SEBI may pass order for disgorgement. And in case of very serious matters, SEBI may also refer for prosecution by filing a criminal complaint in the court of law. Now, if investigation is delayed, all the actions will be delayed. And if action is taken after 10 years, which has been viewed very seriously by SAT, Securities Appellate Tribunal, Over the years, I find there are a number of cases where SEBI took 8 to 10 years in issuing a show-cause notice or completing the investigation or initiating action against the entity. Now, when the appeal was filed by the entity against whom action was taken before SAT, set aside those cases without going into the merit of the case. The SAT said very clearly, these are very old cases and you can't impose penalty after so many years. I remember at least 2 cases which went up to the Supreme Court level. In one case, Supreme Court did not intervene, and about a few months back, when the entity when SEBI filed appeal before Supreme Court, because SAT had set aside the order, Supreme Court was very annoyed that why SEBI had taken 10 years, and Supreme Court directed that SEBI should carry out internal investigation. Why so much delay has occurred? Now, such delay should be avoided. While SEBI has been doing good work, and but such type of orders by SAT and the Supreme Court don't reflect well, and sometimes investors may also lose confidence in the market when such type of orders are passed. Other point which I shall like to make is that if you see the annual report of SEBI giving data on the investigation taken up and investigation completed, but SEBI is not giving the data on investigations pending at the end of the year. I remember very well that SEBI used to publish such data. I don't know why SEBI has stopped giving such data. And not only SEBI should provide data of pending investigations at the end of the year, SEBI should also provide age-wise analysis, like whether the cases are pending for more than 2 years, 3 years, 5 years, or more than 5 years. Other important point I shall like to mention is that when SEBI carries out investigation, as I mentioned that SEBI may call the entity to record their statement and to collect further evidence. But I find that entities, they are based in different parts of the country. They have to come to SEBI office and record their statement. Many times, the people who were involved 10 years back, they were the key management people and independent directors. They are no longer working with the company. They go to SEBI and they tell the SEBI that SEBI asked 20 to 30 questions, but they reply that we don't remember now. We have to get information from the company. And my suggestion is that SEBI may make an analysis whether such statements really help in collection of evidence. And if SEBI relies only on the statements and not on the documentary evidence, then it becomes a matter of cross-examination. And that is a very time-consuming process. And SEBI may also consider the recording the statement on through video conference. When the court proceedings are going on through video conference, SEBI can also carry out through such recording of statements through video conference. Now, one more important point I shall like to mention is that there is a provision of settlement. After the investigation is completed, if there are prima facie violation, the entity can come for settlement. Now, this scheme of settlement was introduced to expedite the entire process, to save the time and resources, and to avoid the litigation in SAT and the Supreme Court. Now, I find from the annual report of SEBI of last year that 386 cases applications came for settlement, out of which 285, about 70% applications were rejected by SEBI. Now, I think SEBI should review its policy, why so much rejections are there. And if SEBI goes for settlement, if the entity is willing to pay the penalty as specified by SEBI, and as per the formula specified in the regulation. So SEBI should go for a settlement rather than initiating the quasi-judicial proceedings. So I shall end at this stage, and I shall be glad to answer during the question answer session. Thank you.
Thank you, Nagpal sir. You have actually shared your deep experience and deep knowledge of entire thing. And simultaneously, now you have come to the other side of the table, so you can understand the problem also. Uh, uh, the point which you have raised, that is also right. If you pass interim order and then you are taking the other order too long, or investigation is coming after 6-7 years, that is also painful, and I think that is reflecting on the regulator. And then if you pass interim order and then after some time the party is going to set and then you are reversing, the point is here, I just say it is a capital punishment for the security market person. Because if you have seen today, if SEBI is taking any action against any company, the market capitalization is drastically reducing. 20, 40, 30% and 50% share price is going down. And it is evaporating the entire half the capital market capitalization. So you have rightly pointed out that investigation should be complete fast and it should be time bound. And the SEBI should also do the cases which are prominent, which are effective, not all cases. I think there are so many cases are pending, and how to do this. So over to you, Bidale sir.
One point I shall like to add that when SEBI takes so many years, and after that, if SEBI decides to close the matter, SEBI should also inform the entity that now matter has been closed. Because when SEBI issues the summons, and that entity is always under fear that after 5 years, SEBI may initiate some action. But if SEBI has decided to close the matter, that entity should be informed that now investigation is complete and matter has been closed.
Okay. That's absolutely right, sir. So now, Bidale sir, where Mr. Nagpal has left, there are so many other things and so many things which you have seen. And what is your advice to the corporate as well as regulator now to do this? Over to you, sir.
Thanks, Pawan, for inviting me for this talk in this seminar. And also thanks to Mr. Nagpal to giving the complete picture of the investigation, how it is carried on in SEBI and other points. But I would like to start on a positive note that the responsibility of the SEBI is to provide an transparent and orderly market. And I believe that to a very large extent, that has been achieved by SEBI. The frauds, manipulation, these are the aberration in the system. This is the rule of the system. And as you had talked about certain frauds, etc., which I found some were not related to the securities market when we talk about the where the transactions are taking place. That's like Ponzi schemes transactions, Sahara, PACL. They were not concerned with the transactional part in the market. They were just some money, some person has collected the money and that has went away from that thing and not honored the promises. And then the recovery process has to be done. So when we talk about the market frauds which are taking place over here, now the nature of the market frauds has itself changed. Earlier, we used to see that the starting point and ending point was with the transaction in the market only. But now the things have changed a bit. That starting point is not the brokers or the operator in the market. The starting point is the corporates itself. And that is actually the issue of concern, that how to deal with that, because that is connected with the conduct of the corporate sector also. That how they are. I will give some background, I will give you that how all these things earlier, if you see up to 2000, more of thing was of that transaction nature, that okay, you're doing insider trading, you're doing fraudulent trading, match trading, synchronized trading. These were the issues which are being dealt with. Then over a period of time, the SEBI started strengthening the listing agreement where a lot of onus for the making the disclosures came upon the corporate side. Earlier, that onus was not there. The bare minimum information was available, and that's why the corporates were not get held guilty for any kind of misdemeanor per se. I don't recollect any case where the corporates were punished in the early stage of the SEBI. And along with that, when this corporate governance movement started, and SEBI was also a active participant in the corporate governance movement, all kind of on us requirements on the corporate side came that you have to conduct in a gentle corporate entity. You have to be a respectable corporate entity, and you have to make the disclosure in that regard in a proper manner, so that the information asymmetry is minimum and the investors can take the decision the based of the information which is accurate, timely, and effective. So accounting standard was one part of that. I still remember that before the first corporate governance report of Mr. Birla came, the accounting standards were not mandatory in India. The first stage when the accounting standards made mandatory, and then the things start making, okay, you have to, what your statements you are making, that is uniform in the accounting statement, so that the investor can take a proper decision, they can compare among the corporates and other things. So that was the one of the part. Then the worldwide, that if you remember in 2001 and 2001 and 2, the worldwide, what kind of mayhem has taken place in the corporate side, that accounting fraud, this and that. That also diverted the SEBI's attention that why now we look at the governance side of the corporates. जो है. And as you know that whenever the things start happening and this industry start growing, in that scenario that happens that a lot of merger and accumulation take place. The acquisition will be taken, merger will be there. For that also, the lot of information was to be given. And as the corporates become bigger, the issue of related party transaction become very, very important along with that. So a lot of issues start emerging out of the corporate governance, this related party transaction side also, that whether the proper disclosure were made or not, or whether the money was siphoned by the promoters through this mode. So a lot of regulations brought for that also, that if it is a related party transaction, how the minority shareholders will play a major role in deciding the that related party transaction, etc. So these were the things. And then one more thing was happening, that along with that, the market was getting institutionalized. Earlier, we have seen in the starting that only FPI was a small stand, then to a bigger extent they started coming in the market. But we have seen over a period of time that market institutionalized, insurance players have come, mutual fund industry has come of age. It has got a very big player in the market. And then you see AIF, etc. They have come, and they are getting huge money with them, and they now they're in the position to ask the corporates for the more disclosure and the adequate and accurate disclosure. So these all things happen. Along with that, if I see that the proxy advisor also stepped in, where they started examining very, very minutely each and every resolution of the corporates, that whether these resolutions are in a proper fashion or not, whether this should be, this is in the interest of the investors as a whole, all investors, or in the interest of the some few specific shareholders, as a promoters or some institutional investors. So that kind of environment start building, and that resulted into that we have seen that the lot of investigations started, or issues getting raised from the corporate side. That because earlier I have seen that there was a checkbox ticking attitude from the corporate side. Okay, I can tell you one example that we have got a first corporate governance report that was in 99 chaired by Mr. Kumar Birla. And the famous class 49 came in from January 2020 on the basis of that report. After 2 years, again, we wanted to review the corporate governance, the state of governance, and another committee was set up under the chairmanship of Mr. Narayan Murthy of Infosys. So I just asked before the committee, I want to get some information that how this is functioning right now. When I asked for the data of the, what do you call, that how much duration of the meeting of audit committee is there, that you cannot think of that what was the duration of the audit committee meetings. So it was saying that it is just a checkbox ticking, nothing, no serious thing. And the thing was happening that you appoint your independent director, they will not open their mouth, they will open mouth only for the eating cashews, nothing else. So that kind of things are happening. But once the institutionalization of the market take place, regulator also become more focused on those issues. These issues start coming out of the boardroom that the companies are not behaving in a proper fashion. They have to make more disclosure, accurate disclosure. Whistleblowers also played a big role, though at times the whistleblowers may not be the real whistleblower, they may be the crooks also. But it created an environment where it put the corporate sector on edge. That yes, now we have to be more serious about all the issues. And that was time when the SEBI also, as Mr. Akpal has said, set up another department just for these kind of the informatics in the system, Corporation Finance Investigation Department, that segregate then the main investigation department, looking into all this kind of issues where the money has been siphoned off, related party issues, accounting has not been followed, and corporate governance norms has not been followed. So these kind of things came to that. But as we go ahead, the challenges which are coming and the new trends which are emerging is that the technology is taking over everything now. Everywhere is the technology. The human being are getting in the background. As this artificial intelligence coming, I think that someday we find that the human brain in a museum, that this used to be computer sometime. So, and in that basis, when we are seeing that how the things are happening, and the speed of the transaction, speed of the information processing, other things are taking place, that is going to play a big role in time to come. That how the SEBI has to look into all these issues and how they can deal with this thing. And another thing which is happening now, and which you are aware, that the more information is available than what is required. The more information is available, and you don't know whether this information is fake or false. I give you one example that I think sometime 3-4 years back, there was a news on a very big business news channel that in one of a big bank, the one of the biggest investor of the world is taking 10% stake. And the stock went up immediately about 10%. The shoot up. It's not a small bank, it's a very big bank, very big bank. The top, you can say 3-4 private bank. And after 2-3 hours, they say, no, this information is not correct. And the stock came down. So this is the era where we have to deal with this kind of issues where the information are available and there is no opportunity or even available to verify this information is right or not. Deep fakes are being used now. This is got a new problem that deep fakes will be used. You find that the video is roaming where the chairman of the company is giving some statement and the market is behaving on that. So these are the challenges which are going to be, and then another, the monster or elephant in the room is the social media. Now you just write anything on the social media and it become a viral. And how to deal with that? The SEBI is trying to deal with that aspect also, but it is so big that for a regulator to regulate that kind of thing is a very, very difficult. You find any media you go about a company, they were talking about anything, they write anything, and they just get away with that thing. Then the comments can adding and adding. Lot of these channels are going on, Telegram channel, this and that, and this is becoming a big challenge. So these are the financials are there. Financial influencers, they are just they got no background, nothing, but they are telling the people buy this thing, that thing. I have seen so many Telegram channels, which what they are doing, they will start with the people that okay, they will make a member of that group, 1,000, 2,000, 5,000, 50,000, and then suddenly they will say only administrator can send the message, other reward from the send the message, and then that the group will vanish. And what the money people are giving to them, that is over. And now you can't locate them because nothing else is there about their phone number. So to deal with these kind of challenges, because this is going to be a continuous race, technology is going to advance. We have to deal with it. A regulator has also have to enhance its uh, capacities for that. Regulatory also, manpower also, technology also. They have to advance themselves. If the others are having the, see, if others are having the latest weapons, so we cannot do with the lathi. So we have also trained ourselves for that. The skill upgradation skill is required for the manpower. Capacity of SEBI has to be enhanced for that. And coordination with other regulators are very, very important, because now we are seeing that about the data, the laws are being made. About social media, the laws are being made. And I think SEBI should be a very, very, and I feel that SEBI must be a part of that, but SEBI should also play a very, very proactive role to see that how the regulation can be made proactively on these for these things, so that the aggression in the capital market can be reduced to the minimum. I already talked about that deep fake. And another issue, I think, which may not realize that we have to somewhere understand this thing also. The judicial scrutiny of the orders of any regulator, whether it's SEBI or it may be. Now, some upgradation required in judiciary also to appreciate the evidences which is electronics, which can be manipulated, which can be this thing. Uh, because I've seen that when we see the orders of the court, at times we find that the things are not being represented in that manner which should have been done. Now, the evidence can be faked, can be there, this and that. So this there also something need to be done. And I believe that the coordination between the SEBI and the SAT at least is required, where they can discuss the issues. They should come out of that thing. They the segregate the objective same. I've always believed that anybody who is working in the government or the public also, everybody has got the same objective, that we have to protect the interest of the investors in the securities market, and we have to see that all the wrongdoers are punished, and punished heavily for that. And for that, everybody should come on the same page. With those words, I will like to stop over here. Thank you.
Okay. So, Bindlesh sir, you have rightly pointing out that the wrongdoer is faster, but regulator has becoming more faster than wrongdoer. And the way things are changing, and the new technology and new media is coming, where people are using, SEBI has to think on out of box things and use technology for this. So thank you very much for your insight. I will come to the question answer and certain points of my observation. First, we can listen to our speaker. So Nehal, now your turn. The two regulator has said certain things which they have experienced, which they have done. Now, as a industry, what is your perspective on this?
Hi everyone. Thank you for inviting me to this forum, and it was great hearing Mr. Nagpal and Mr. Bindish. From corporate perspective, maybe I can just throw some of the insights that largely people are experiencing in the capital market as well as in the listed company over a period of time, especially in the last 3 years. Under the new chairmanship, because things have completely changed under the new regime. After Madam has taken over the helm of the regulator. So overall, of course, if you look at the capital market as a whole, uh, the amount of the growth which we have seen in the capital market in terms of volumes, in terms of the number of equity shareholder, demat account, mutual fund folios, number of PMS schemes, etc. If you see, there is exponential growth has happened in the industry, along with retail participations have gone up substantially. And with that, I think the regulator, what they are doing in terms of various initiatives, awareness program, becoming more stricter, initiating, a lot of kind of actions against individuals or the relevant stakeholders. I think it has been doing an extremely good job. At the same time, there is also kind of somewhere some speed breakers or fears has been created in the market participants that, okay, fine, if you do something wrong, then definitely someone is watching you. So that kind of experience are people experiencing at the moment. And actually the awareness has gone up substantially high when it comes to the regulatory regime, which is extremely good in that sense. Of course, a lot to do more. But when it comes to kind of investigations, inquiry, inspections, audit, whatever you call, everything is emanating from kind of any technical violations or any kind of complaints. So generally, regulator, what they do generally, the first level of regulator, as some earlier speaker also said, it's a exchange for the listed company, and of course SEBI comes as the first regulator for the market intermediary. Since there is an exposure at my end at both the levels, I would cover up both the level, in a way. So when it comes to listed company, of course, exchange has to be handled extremely careful when it comes to the industry, because exchange is the first level of regulator. The moment you put any disclosure in public domain, they will give you a call if there is any iota of a gray area in the disclosures. I mean, there is a high level of systems which they have, inbuilt, or the system that they're using, because of which, they get kind of pop up at their end also, and they actually call the secretarial team to ensure that, the disclosures are accurate. So that is very, very critical, that whatever the disclosures that listed company is making day in, day out has to be extremely accurate, and in whole and complete. And there is always a gray area which the company has to dealt internally first before they make a disclosures, frankly speaking, so that there is no there is a complete transparency when it comes to the investor. Second thing is, when it comes to the any inquiry and investigations on a PIT, or the prohibition of insider trading or price rigging or manipulations or the volume increase, whatever it could be, there the exchange are the first level of regulator. Mostly they are the one who sends the alert immediately the moment there is a spike in the moment across the market. It's a trend, actually speaking. So in that case, they have a standard checklist which they share with the company, and then that point in time, the company has to really ensure that their response to the exchange has to be completely accurate and very smart response that you have to submit, so that it doesn't get escalated to the regulator. Because it is many of the thing, if the response doesn't get submitted properly, adequately, then it get escalated the matter to the kind of the regulator, because the exchange role is to facilitate the regulators in all the investigations and inquiries and monitoring process. So in that case, when the listed company respond appropriately, engage with the exchange proactively, then chances of getting matter escalated to SEBI is less. I'm not saying it will not. It will happen. It has to happen. But at least the company has to do its best at that point in time with the first level of inquiry. And then when it goes to SEBI escalation, then definitely full-fledged, when the inspection and investigation happens, then of course one has to kind of engage your internal team, ensure that you have the very first thing when an investigation happen, in any whether it's a market intermediary or in the listed company, the very first thing which regulator asks is a calendar of events, like how the event happened. For example, anything for that matter, when the company has come out with M&A deal and there is an issue with the disclosures, what is the trigger point? So therefore, the very first thing the regulator always asks is the calendar of event. So possibly one good work which the company can do or kind of is that to always have a calendar of events ready for their own study. That how the calendar of event has started, how the communication has flowed, how the entry into SDD has been made. So they are very mentally, they are very clear. There is no gray area in that point in time. If each and every stage of any of the deal, if there is a immense clarity, within the system, then the appropriate entry also can be made in the system, and the event also gets created automatically. Of course, this is a proactive thing which the company can do to create a calendar of event for whatever the events are happening in the corporates, so that whenever some kind of inquiry or some email come from the regulators for submitting some data and all, at least that point in time the company will not struggle, because when the event has happened, let's say 8 months back, and now you have got the email from the regulator asking the data, so then there is a 8 or 9 months has already gone. So of course memory also kind of gets faded away. So when the event is already happening, that point in time only if the company creates a good calendar of events, I think it would be a really good exercise, and that would be a very good base for anything which happens in future also. So I think that would be one thing which can be done. Second thing is, of course, when such event happens, there is another thing which the regulator asks is a NDA or the confidentiality agreement. So they ensure that the company has to have NDA with the relevant stakeholders, especially the deals are going on. When any capital market transactions are going on, they definitely would ask what is an NDA, what is the confidentiality notice has been served. So one also has to look at your employment letters which have been issued to the employee. The clauses has to be thoroughly checked. Your auditor's appointment letters has to be checked extremely thoroughly whether the clauses are mentioned about the kind of confidentiality NDA. Actually they check all this thing actually, and then I think these are some of the protection which company can kind of inbuilt. And of course most of us are doing it. It's just to revisit sometime. It always helps to ensure that we are not missing on any of the things, actually speaking. uh, and then of course sometime it is also important is to read the orders of SEBI and create the awareness within the organization, which is very essential for the compliance and company secretary or the legal department. Because I think what is the mindset, how they have investigating, what are the checks and balances. SEBI has looked at it. What are your checks and balances within on your own company? Are you kind of missing somewhere? Like you can always bridge the gap if you do self study, you do your own introspection, and then come out with some gaps and then inbuild those gaps into the company. Of course that's a proactive step which every one of us has to take, and if it is taking, then it's fine. But it is very essential for all of us to be extremely kind of diligent in being more proactive in the process, refining the process, keep refining the process. There is always things, there's always, one has to do better and better, so we always learn from other people's mistake. So when we read the orders, we understand, okay, fine, whether we have done this is or not, like we always recheck those things. So it's very good to have those practices also. And when we kind of create an awareness within the company, that also kind of is very important that all the stakeholders are on the same page. And there is kind of a little fear factor is important within the company also, that something goes wrong, then people are responsible, right? So those kind of culture is also very important. I would say risk culture or compliance culture. So the more you create those culture, better for the organization and the reputations and overall governance practices also. So I think these are some of the things which I would like to kind of highlight. Yeah.
Okay. Thank you, Nehal. Thank you for
Hmm.
giving a prospect and simultaneously telling and advising the corporate also what
Hmm.
they should do.
Hmm.
So thank you very much. Now
Hmm.
I'll request Ravi Prakash to discuss about the contemporary issue, power of SEBI in stock exchange and how they are using technology to unearth this fraud. Over to you, Ravi.
Thank you so much, sir. I think much of the information and perception about the evolution of regulatory regime of SEBI, under which they crack down many of the frauds, have already been discussed. We have also heard those who were at the top brass of the regulator speaking the minds as to what is the approach through which these crackdowns were implemented. And certainly the word of wisdom from Ms. Nehal, who told us how to be cautious when you get an email from stock exchanges and how to take it forward. You see, the first point for any investigation, because let us think it like this or see it like this. There are two types of approach before any regulatory action is taken. One is to conduct an invasive exercise, which is investigation, which requires certain actions, certain processes to be run. It is a process where some dialogue is also involved, which means that some sort of interrogation, summoning, responses are also involved. But prior to this invasive exercise, we must appreciate that there is a lot of non-invasive exercise which goes on continuously at the end of regulator as well as the market infrastructure institutions such as stock exchanges and primarily stock exchanges as well as depositories. So what do they do in surveillance is that the market data, which is in itself a very big data, they have got the whole lot of infrastructure and which is a state of art and continuously improving. I will be taking you to that state of art infrastructure. But before that, what they really do is they process that big data based on the algorithms and continuous inputs and improvements that they make. And their systems generate hundreds of reports, some of them in even a real time. Those reports are then processed, and wherever red flags are raised, wherever there is a particular red flag, they start studying it. As rightly stated by Ms. Nehal, the first line of regulator is stock exchanges, so far as these listed companies are concerned, and also for brokers. So, and those who are in the audience from the listed entities or those who are associated in as an employee, KMP or consultant to the listed entities, and I can vouchsafe that many of them would have seen emails coming from stock exchanges or SEBI. And those who have had the opportunity or an occasion to deal with these kind of emails 5 years earlier and now also, they would also be able to realize that now there is a stark difference between the kind of communications that they used to receive from stock exchanges earlier and the kind of communications, the kind of inquiry which is now being made by the stock exchanges. This, more than any other thing, reflects on the fact about the technological development, about the grasp of the subject, and the nuances by not only the perpetrators, but also by the regulators, that they are now not coming to do a post-mortem exercise. The objective is not to conduct a post-mortem exercise after the bank has been robbed. They want to check on people who are planning to rob the bank. And for that, they have quite a bit reversed the entire process, which is also called reverse engineering. And probably for this preparation with which now investigations at the stock exchange level or SEBI level are being conducted, they must have reverse engineered that if someone has to manipulate the stock market by trading or otherwise, what all would be the necessary steps they ought to take, or what all are the malpractices they would engage into. So they are with those checkpoints ready. Those are probably put into the algorithms, and they are investigating or scrutinizing those. So the real problem is not getting a query from the stock exchange, because most of it is algo based and something must have red flagged in your case based on the algorithms and the reports that are generated as a part of their integrated surveillance system. So the problem is not that you are receiving a query. The problem is not being able to respond to it satisfactorily, not being able to comprehend what they are looking for, what they want. And if you are able to get it, then due to own perception about some perceived weakness, not being able to reply to it, trying to be evasive. So these are the general problems that in my first-hand experience I encountered while dealing with professionals and consultants, professionals, and companies alike. It's a common thread of issues that I see. So before I get into details of how and what should be the approach and how you should do it, let me just give you a flavor, because we must know our regulators and we must know what they are capable of doing. Although I need not to repeat, because I think if one opens the website of SEBI or the newspapers daily, you would very well get to know how capable our securities market regulator is. But I think it would not be needless to give you a brief or a gist of or the bird's eye view of their capabilities. So far as this surveillance is concerned, there is an advisory committee for leveraging regulatory and technology solutions. They have this committee, apart from many other committees which were working on the technological advancements. So this committee is a very active committee, and they have, under the aegis of this committee, there are certain actions that have been taken. So the stock exchanges are conducting real-time surveillances, and which is integrated with SEBI's own surveillance systems. They also keep a check on the misconduct in market, like unfair trade practices, manipulations, front running, insider trading. And while these are only keywords that I'm using, there are hundreds and thousands of algorithms or logics that are built into the system to track unusual movements or unusual conduct in the market. And to mind you, these are boiled down to the very intricate levels. Even at the retail level, it can boil down. Now, next slide, Shiva. So there is also a measure for monitoring stocks with low non-promoter holding, where the public float is less. Those stocks remain under the watch list, and any unusual movement, as I said earlier, is a red flag. Then the extended short-term additional surveillance measure is also deployed to have stricter price bands and to monitor the high risk contracts. Usually these are also for the scripts which have got their options also listed and trading at the stock exchanges. So they have also extended the short-term additional surveillance measure to FNO as well as the equity side. Then we all know that recently PAN-based freeze was implemented, under which more than 556,338 demat accounts, and this is the data as of March 31st, 2033. The freezing was carried out so that there are no violations during the trading window closure period. It is a different matter that people always find a way, but I'm just reflecting on what preparations are done and how far these can go. And of course, these are all scalable preparations. It is not that they need to overhaul the technology to scale these. These could be scaled up under a suitable policy in a very short period of time as well. So there is a framework now which is being pondered over for unsolicited messages and videos that circulate on social media platforms. Those who follow securities market policies would remember that there was a consultation paper that came out on the topic of influencers, a teething issue not only being faced in India but globally. Although it has its own upsides, but the risk it poses is also worthy addressing. And then one of the issue which was advocated by Pawan sir also in many programs, which I personally evidenced, was the protection for the insolvency companies, which is also now rolled out. Next slide, please. So let us come to quickly dive into the technologies and get a hang of technologies that SEBI is using. There is something called EDW, Enterprise Data Warehouse. Consider it as the storage warehouse for data which is being used by SEBI. I would just reflect on what is the capacity of this warehouse in terms of data. It is 1 petabyte, which you can see on the screen, is more than 1 petabyte would consist of more than 10 lakh GB. And the size is more than 3 petabyte, which is going to be available with SEBI. Then there is data warehouse and business intelligence system, which is an integrated system. It accesses critical documents such as market data, financial statements, regulatory filings, audit reports, and surveillance alerts. All are integrated into meaningful reports, which empowers informed decision-making and robust regulatory oversight. Then there is something which has been newly rolled, and to where all these things are being integrated or upgraded is something called data lake. This is going to be used by SEBI for better and automated generation of various reports and alerts. Surveillance technology, of course, it is also going to be integrated with data lake, or as we are speaking today, because I'm speaking from the public records which were published some time back. Today, as we are speaking, it might be the case that these are already acted upon. And you see the state-of-art network architecture is such, and it works on man-man topology, which links SEBI's head office with their regional office and local office. So there is complete synchronization among SEBI and other MIIs as well. Next slide, please. So these alert systems are continuously updated, feeding into them the new and innovative manipulation schemes or techniques that people use. So every technique is breakdown into steps, and algos and logics and parameters are framed and then uploaded into the system so that it can also track those patterns, including the new trend of manipulating scripts through social media and news channels. So in this bit, there are a host of digital forensic tools with SEBI to collect data during search and seizure operations or even otherwise. For example, there are devices or technology with SEBI which enables them to take photo, video at a location with geotagging details. Any survey, any operation, any training program that can be time-stamped, geotagged with the help of that technology. As Bindish sir was speaking, that the courts, there is a unique or peculiar challenge faced by SEBI in courts about the evidence, the credibility of evidence. These are the steps that SEBI has been taking to bolster up their investigative capabilities and also to supply credence to the evidence they table in the courts or in the course of their proceedings. Next slide, please. Yes. So case management system and document management system. These both are, as I would explain, these both are, they must have scaled now to AI as well. They are now in the process of integrating these with AI. But leaving aside AI, these offer a very widespread menu card to SEBI to take details both in a la carte or buffet. Whatever they want to pick and choose from these two databases, they can. It offers a wide range and variety of information to them. For example, it contains the case management system database contains MIS reportings for monitoring and compliances of different processes of proceedings, such as adjudication, section 11B, recovery. Did you ever wonder how do you get these notices and the follow-up notices and the recovery certificates or the summons if you do not reply by the date specified in those notices or summons? How do you immediately get another follow-up? So this is all because of these triggers and database management systems which automatize the follow-ups and reminders. And then this document management system, this is also a state of art. This is not only a vanilla database management system, but it consists of repository integration services. It can also convert physical files into electronic ones. It is connected with CMS, course, can convert documents which are not OCR into OCR, offers a bilingual facility, conversion of Hindi into English, English into Hindi. Probably by the time, I mean, as we are speaking right now, it must have become a multilingual. It must be offering a multilingual support as well. And if not today, then certainly that's the way for future, because this is how SEBI has been scaling. Next slide, please. So what all SEBI can procure with all its power, tools, and technologies? They can access to your bank statements, disclosures, company details, investor and shareholder complaints, trade and order logs, correspondences that you had with exchange, price volume data, of course, employees detail and ITR filings, their bank statements, not only of the company, but the bank statements of each and every person who's associated with the securities market. And as they have power to summon, and the person who's recipient of a summon is duty bound to cooperate, they may also ask you any other detail, which I would be covering forward. So bank and transaction detail, KYC documents, call data records, WhatsApp and Telegram chats, mobile tower location they can assess, geotagging they can obtain, social media details. We have seen plethora of orders where the connections were drawn based on social media and other links. Traveling and hotel details, as we would discuss forward, we would see many cases have been cracked on using combination of these details to draw connection, center, motive, and the surrounding, as what you call it, the preponderance of probability, which lean into the favor of guilt of committing an offense in the securities market. Next slide, please. So, what is, I mean, the investigation process is certainly a fact-finding process, but what do? They analyze data, market data, exchange data, deposit data from depository, data from banks, data from brokers, and data from company. Data from company is the newest of the trend that they are engaging into. And that's where the game changes, because what used to be the last step or an intermediary or secondary step earlier has become a primary step now. Sources is SEBI surveillance, exchanges, government, media, complaints, etc. Purpose is to gather evidence and identify violations. And action could be, there is again, sky is the limit. They have got whole range of diverse actions that can be taken, starting from directions in form of suspension or debarment from the market, to disgorgement, to adjudication, inquiry, prosecution. So there is a whole diverse range of actions available with SEBI, thanks to the powers contained under Section 11 and the series of 11(1)(b), 11(c), and then Chapter 6A, which contains the procedure for adjudication, and then intermediaries regulation, where the entire set of inquiry proceedings is recognized. So in the last year, total in year 2022-23, total 144 investigations were taken up, and number of investigations completed was 152. If you compare it with 2021 and 22, only 59 investigations were taken up. So just the double. This also testifies what I'm telling here, is that with all these powers, with all these automatization and advancement of technological, advancement of technological edge over the perpetrators who have their real ingenuity, but do not have this state-of-art, connecting dot capabilities. SEBI would, and I feel, as the old adage goes, that you have to be ahead of the thief to catch them. They are definitely moving in that direction. Next slide, please. So yes, these are the powers. SEBI can summon, search and seizure, penalize and recover, call for information, prosecute through special court. There are a couple of limitations as well. Arrest cannot be done directly. Of course, the state agencies have to be involved, and the power to intercept calls is not there. But it is not about what power is not there on paper. It is about how SEBI, and SEBI is quite innovative in that, how did they overcome these limitations? They check your mobile tower location. Even if they do not have the power to intercept calls, if they have suspicion on two individuals, suppose, who they are saying or believing that they ganged up and manipulated the market, and both these individuals are in the state of denial that no, we did not know each other and never met with each other, never crossed path, not connected at all, they can get mobile tower location and say that on certain date you were both in the same area, probably at the same location with such distance. And this has happened in so many cases. Next slide, please. I will just, leaving aside the scope of inquiry, because we would like to have the audience the benefit of raising their questions and also the benefit of listening to the answers from the speakers. I would say that the key information categories in which the information can be categorized is legal compliance. So the exchanges and regulator may ask you compliance data as well as the status. The organizational and operational structure of an organization, which may include designations, stakes, hierarchical chain, reporting structures, as well as the operational framework. And the data could range from personal data, financial data to operational data, including the audit procedures of sharing information within the organization, such as MIS reporting and all. And based on this, they conduct their investigation. Next slide, please. Next slide. So these are the cases where, so for example, these are the cases which are discussed, but I'm just telling you what kind of documents were relied on. So in CNBC Awaaz case, which is stock 2020 case, trading data were relied, price and volume data was analyzed. But these are not so unique. But what is unique here is that ATM cash withdrawals were also investigated by SEBI. And the location of ATM, from where those cash were withdrawn, how they were utilized, all of that, the regulator went into that deeper scrutiny in this matter. Next slide, please. So here, as you see, in this case, financial statements were analyzed. Now, this was peculiar because the precursor was, of course, Satyam and Sahara and other couple of cases which really hit SEBI hard in terms of got them surprised. But after that, they have come out with capability. Now you see stock exchanges asking you questions, or listed companies question, and their CFOs, they ask questions on how did you do this provision? Why did you not follow a particular standard of Ind AS? How you are complying with a particular accounting standard? Why this provisioning? Why did you not follow your accounting policy consistently? Why there is such an unusual transaction in your balance sheet? What was the purpose? What is the documentation that you prepared for doing this particular transaction? Did you avail audit committee approval for a particular related party transaction or not? So they are not only regulators of security market now, because your financial statements, they have also come under the ambit of PFUTP regulations by virtue of an amendment which is not so old. They may get into the sanity and sanctity of your books, because in the case of Kanhaiya Lal Baldev Bhai Patel, and much before that also, but I'm referring to this case because it got settled from Supreme Court and leaves no room of doubt that the element of inducement is sufficient to say, if the inducement is fraudulent, one may say that a fraud has been committed in securities market. So instead of, and now it has been realized that instead of perpetrators doing some hanky-panky trading into the securities market, what they do to really induce the investors and misleadingly induce them is to cook up their own financial statements. So, and that's the worst form of inducement. It has been realized by the regulators. So now you see queries and more of them are rising at the doorsteps of listed companies and intermediaries alike, questioning the sanctity of their financial statements, seeking an explanation, and delving deeper into the details, financial details, which they never went into. Now, I had a long list of things to speak, but for the paucity of time, I would stop here with just only one thing. Is that whenever an investigation is taken up by stock exchanges and SEBI, they please forget and don't be in any preconceived notion that they may not or they will not delve into a particular area. Please be very clear that the information they seek, and if an evasive response is meted out to that information or a casual approach is adopted, the inquiry will only increase. And I have seen in cases, in many of them, that even details of parties hosted by the particular promoter of a company were obtained by a stock exchange out to that information, or a casual approach is adopted. Even the guest inquiry will only and the guest list and the people who attended that party along with their names were asked from the person concerned to confirm if they attended that party. And there was an insider investigation case that was being proceeded with at stock exchanges. So this is just to indicate that these are serious matters. The regulator is very serious about anyone trying to play with the integrity of securities market. They are ready, much more ready than they were ever earlier. And now the good thing for investors is that their technology is scalable. And the bad thing for perpetrator is also that their technology is scalable and it is only going to become more strong. So I'll leave it at there, sir, and we'll address the queries. You're on mute, sir.
Yeah. So thank you very much, Ravi, for giving the experience and the information about how SEBI is doing, what are the things. So no doubt it is taking a shape and doing this. I was reading certain things which Mr. Bindlesh and Nagpal sir can tell me. I was just reading an article where there was a mention that what are the weakness of Indian investigation system in securities market, and especially on SEBI aspects. So it was mentioned that resources constraint is there in SEBI. Financial, it should not be. They mentioned the financial also, and the human resources. Human resources, they mentioned that the capability, not the number, the capability to do investigation. And especially in complex cases where sophisticated financial instrument, large volume of data and other things, that is there. Second is technological limitation is there in SEBI. The way things are moving, the way things are changing. Then regulatory framework is also coming in entrance because we have a system of following the governance process and the and various other aspects of natural justice. It's always delayed and it's always taking time. Then handling of complex cases, that expertise is missing, which is especially on digital asset, algo trading, complex derivatives, that is also there. Because when we discuss about, majority people are discussing about the cash market, but derivative markets and the algo trading and other things and the complex cases are not touched upon much. So it means the people are doing this, the capability and the market realization is not there. Then coordination with other entities, that is also another aspects, the law enforcement agency, there's no proper coordination on this. And then market regulation and fraud detection. So detection is always after when the fraud is taking place. Ravi was mentioning that why the fraud we should catch hold of. Initial stage, red alert should also be there. And then public perception and trust. That is also a missing point. The capability. So people think that the wrongdoer are faster than the regulator. So these are the points which I saw and everybody has discussed. So Nagpal sir and Vidalish sir, what are your views on this? Anybody? Vidalish sir, you can start.
Mr. Nagpal is responding, or
He's there, but I think he's mute. So you can tell.
see, I don't agree that the capabilities are not there, and that technological advancement and the human resources also that not well trained. But I will certainly say one thing: say, every evolving process. It's not a static one. You get one skill today, one set of the technology today, and then that can go on for the years together. Now the world is changing very fast. Technology are changing very fast. Just in last October or September, we started talking about AI. Now everybody talking about AI. If you talk to somebody in the mid of 23, nobody talking about the AI in that manner, that chat GPT, this and that. So this is a process which always continue. That what are the new technology advancements are there, and how to deal with that, how to train the manpower. This will go on. And I don't feel that is a constraint in this is a perception maybe outside that, but somehow a personal feel my is there that the appreciation of the evidences in the judicial scrutiny is at times is not commensurate with the latest technological advancements and the latest thing which happened in the system. The judicial system still works on the old mechanism, where it is very become very difficult to the judicial authorities that this means this kind of evidence, sufficient evidence. We can't have the hard evidence. I see not in the regulatory side. I have seen that you can't tap the phone of anybody jo hai, without permission. This is a violation of privacy. And then say get the proof. What proof I can get? That proof only I have got. That they have talked. Now Mr. Ravi talked about that that they were in the same tower or something like that. Okay. Now in my building there are 2,000 people. They're in the same tower. How you can prove that thing? Court will say no. And the counterparty will say no. You cannot. I don't agree with this thing. Jo hai. Where's the proof that I and he were there? So these challenges will always remain, but as far as the SEBI is concerned, they are quite advanced in technology and technology adoption also. And our younger manpower, which is now coming, they are doing wonders into that area. Just other day in one conference, chairperson was talking about that the one young officer has come out with the idea, his railway system, that how the AI can be used to process the IPO documents also, which can flag off what are the constraints of that and what further queries to be raised. So I don't agree with that part that technologically SEBI is far behind. It is always a race. It will always be, can't be always say that, but it is a evolving process, and we are doing well. And as far as the coordination with the other authorities are concerned, see, this is always a constraint, less of in the Indian with the Indian counterparts, but with the overseas counterparts. I face this thing. This is a big problem on getting the information from the overseas. So these kind of issues are there, but otherwise, the decent job is being done, and the market is. You see, we can see from this only how the market is orderly fashion and is functioning, transparent functioning. The number of investors are increasing, institutional investors are increasing, capitalization is increasing. That itself also shows that that things are moving in a right direction. There will be aberration always here and there.
Okay. Nagpal sir, your view on this?
Pawanji, as far as manpower is concerned, SEBI has recruited a very large number of people during the last 5 years. There is no shortage of manpower in SEBI. And one thing I shall like to mention that if you see the SEBI annual report 2007-8 and 2008-9, all the backlog of investigation was completed. There were hardly a few investigations pending in the department at that time. And it clearly mentioned in the SEBI annual report of 2008-9. Satyam investigation we started in January 2009, and by April 2009, within 4 months, we issued the show-cause notices. My impression is, and before my retirement, I was also heading the internal inspection department of SEBI. I used to carry out inspection of the all departments like surveillance, investigation. So therefore, if I don't speak, it will be good. And there is a need of will. If will is there, effective supervision is there by the senior people in the department, then things will move faster. Otherwise, everybody will take his own time.
Okay. Sir, I was, because time is short, so I'm not going to much detail. There are some few questions people have asked that I will share. I was just studying on the international scenario and comparing with the Indian scenario. I was just reading that the US and Singapore, they have a real-time predictive market surveillance. Number one. I'm not saying that SEBI is not doing. The point is, I'm also always saying this: the wrongdoer is faster in adopting technology, so they are evolving new system, new method, and you have to catch hold on time till the time they are doing one scam. Then you are catching hold. Then they are doing something new, like Telegram channel, this pump and dump, and various other thing has come. So I was doing the comparison. The US and Singapore has a real-time predictive market surveillance. Then second is comprehensive whistleblower program. In US, SEC has a monetary reward system and the protection system, which India is missing. Then advanced use of big data and analytics. We have started big data analytics, but it is required. Then blockchain for market integrity, because technology to enhance the transparency and integrity of securities market, that is also required. So blockchain system has to take place in a faster way and in a bigger way. Then cross-border enforcement agency agreement is not there, but US, EU, they have the system. Like today, when Supreme Court was doing this Adani matter, this issue was coming that we can't get this information and people are run away from India, and then you are not able to get the information. Then investor education and engagement. In Canada and Australia, they are heavily focusing on investor education and practical investor education. I was involved in Institute of Company Secretary and the SOCM and other place where education, investor education program and other things are happening. Practically, it is just not a actual investors, they were coming. There was a number which were filling. So proper investor education engagement should be there. And in my opinion, that SEBI has this department, but this department should be a fancy department, and they should do. No doubt, SEBI has, with NISM, they are coming out with a cartoon book where they are talking about. And then regulatory sandbox and financial innovation. No doubt, SEBI has also started this, but this financial innovation and the sandbox technology should also be start. Nehal, you have any point? Then I will ask Nagpal sir and Bindilesh sir on this.
On what? Sorry.
On investigation point as compared to other part of the jurisdiction of the world.
No, we have covered everything mostly. Yeah.
Okay, sir, Nagpal sir and Bindilesh sir, your view on this, which other jurisdictions are using?
Okay. As far as investor education is concerned, SEBI has appointed very large number of resource people, and they carry out about thousands of programs on investor education every year. Then I think there are 3 times in a year when SEBI conducts investor education week in collaboration with the OECD, in collaboration with the ISCO. And now whether those programs are really helping the investors, but you said practical investor education. I don't know what additional things are happening in other countries, but I would not be able to say much on investor education. But as far as number is concerned, a large number of programs are being conducted. There's no doubt in that. Now, technology also, I remember 21 years back, SEBI purchased a software system for market surveillance, and every 5 to 7 years, it is being upgraded. So SEBI is spending money on the technology. And the intention was real-time surveillance. That was the intention. But whether that is happening or not, that is a separate issue. But when SEBI purchased the software as per the annual report of SEBI, intention was real-time surveillance.
Okay. Bindesh sir, if there's one question, if all related party transactions are perceived to be suspicious, then would it not be detrimental for the growth of overall business?
No, I don't think so. All the related party transactions are deemed to be suspicious. Only the system is put in place that where the majority of the minority should decide about that. Because you see, when the related party transactions are taking place, there's somehow maybe in the subconscious mind also there may be a thing that the promoters may taking the advantage of that. It's not always so. And that's why we've not seen many RPTs are falling apart. They're passed by the system is put in place. So there's no way that thing that the starting point is that all the related party transactions are suspicious transactions. This is not the way.
Okay.
So
Sir,
I have not seen that RPTs are falling through, except in the cases some where it is glaring things are there. That's in the case Satyam, it was there that he was trying to merge the two private entities with the Satyam, and which even the institutional investors objected to that, or directors even objected to that. Generally, it is not so. So this perception somebody is carrying, I think we should not should not carry this impression.
okay, one information one person is giving. He's saying this is Prashad from Telligent Technology Solution. In context of disclosure, SEBI should look at Reg FD or fair disclosure of the US SEC. Reg FD mandate that disclosure should not give any class of market participant an edge, that all participants should have reasonable access to the disclosure. In Indian context, some companies make earning release in middle of the trading day, which gives edge to professionals and disadvantage to retail. Disclosure on expiry day also allow manipulation. Nagpal sir, your view.
No, I think there are adequate regulations in this regard. When the information should be made public, and when company giving some information to the analyst, that should also be made public. Board meeting, any important event should be disclosed within 30 minutes from the closure of the board meeting, and any other important event within 12 hours. So I think norms have already been specified.
Okay. Bindesh sir, it is still not possible to identify the first person who floated any information on internet, like WhatsApp, Facebook, the X assisting with access of source. So it means that something which is somebody sending that buy this shares or this shares will go up. So who has floated this information? It is not still. So what is your view? Is it possible or it is still?
I'm not an expert on the technical side, but I personally feel this can be ascertained who the first person to get this information on the social media, but to prove before the eye of law is extremely difficult.
But if these agency, these social media giving this that Mr. Ravi has floated this information, then it will be the proof.
Maybe I'm not sure about that. Because I'm not a technical expert into that and how the technical law prevails. I'm not sure about that.
Okay. So, sir, now because we are overshooting time, actually we want to close our program on 6 o'clock. So I think everybody has given a detailed point of view and the investigation which is taking place, what are the changes, what are the things. I just, after concluding all the points, in my opinion, the SEBI has to do certain things, implement advanced surveillance system. They have a system, but AI related system should also include, and they are doing, no doubt, but because we have to see this more and more result on this, leveraging of big data analytics, that is also one requirement on technological capability. Strengthening legal and regulatory framework, which Mr. Bindlesh and Nagpal sir and Ravi and Nehal all have said, that new types of frauds are coming, new market manipulation is coming. So that is arising out of technological advancement. So you have to change regulatory type. And Mr. Bindlesh has mentioned that evolving system is there, but the evolving system earlier was very slow, but now evolving system is very fast. So we have to work out some fast system. And whistleblower protection incentive, I think if SEBI can start monetizing this and taking protection of the people, I think this will be a big win, because in the corporate world, everybody knows what is happening wrong. And if you incentivize, which income tax and other people are doing, it will be very useful. And I came to know that something is there, but it is not very popular. So something should be there. And then international cooperation, like cross-border agreement, it can be there. So information flow will also take place faster. ISCO, SEBI is a member, so global cooperation system, which they are doing, it should be faster. Promote education, awareness, and expand investor education program. Use digital platform for engagement of the investor. Regulatory innovation and sandbox, which I just told, it should be there. Operational procedural enhancement should also be there, so you can reduce the irrelevant thing. And if there's a violation, so more focus should be on the big cases, not the small cases. Small cases, you just put it on a settlement process, and settlement process should also be very simplified. If I have violated on technological thing and I am coming forward myself, I pay the amount and things should be over. And expertise things should also be there, like financial derivative, cyber crime, other investigation process. Then collaboration with other domestic agency, income tax, PMLA, other regulatory agency, and judicial body, which everybody is echoing on this system, is very different. And transparency and communication should also be there, like which Nagpal sir has said. The SEBI should also come out with how many investigation cases are pending, and how many cases are older of 0 to 1 year, 1 to 2 year, 2 to 3 years, and where the action is taking place. So everything should be clearly visible, that where is giving. I think this giving the confidence to investors. As we have to close this, and as a ritual, I just ask last questions. So I will start with Nehal. So your view on overall message in 30 seconds. You are please unmute.
I said keep creating awareness within the organization about the what's happening in the market, as well as SEBI orders.
Okay, Ravi.
To properly address these communications, the first level investigation inquiry that you receive, and with not casually. I think if you are unclear about giving some information, consult internally, consult externally, and then give proper responses. Try to assist them best with the inquiry and investigation.
Okay, Bindlesh sir.
Yeah, my view is that the issue of the conduct, that the corporate sector should conduct in a manner that the regulator has to make the minimal interventions.
Okay, Nagpal sir, your last word.
I would say that will to implement is very important. If there is a will, all the things which you mentioned can be achieved.
Okay, okay. So thank you very much. Thank you, Nagpal sir, Bindlesh sir, Nehal, Ravi, for participating and giving the true pictures, the inside pictures and the actual pictures. And all corporate world should also realize that the initial presentation which I have given, that one wrongdoing is taking away money of the investor, and the money of the investor is taken away mean the confidence of the market, and then it is a damage to the economy also. So we have to make the Viksit Bharat, that is a target, and we have to make 5 trillion economy. That economy cannot make until unless the capital market is flushing, and the capital market success is depending upon the success of Bharat, and that's why we all should try to do this. And I'm sure I have done research on so many research I have done on this, that today the violation, if you please understand the importance of the governance, importance of disclosure, importance of good thing, you will get better valuation in the market. Even sometimes something wrong is happening, if you are coming out, I think investor will take you as a differently, and they will reward you accordingly. And whatever you are doing wrongdoing, it is not any way out today. If you do something wrong, even if MD is doing something wrong, the company's share price is going down. We have seen the Raymond, we have seen the Jindal. This is one example. So let's make the good governed proper system, and we should take care of this part, that your one wrongdoing is taking away money of the small investor who is having a 10,000, 20,000, 50,000 and everything for him. For you, it's a small piece, but for him, it's the entire thing. So we must take care the last investor and their position also, and their caring also. With these things, I'm closing this session, and I want to request everyone that as we are doing a webinar on every Friday, so next Friday, our webinar is, because it's the first Friday of the next month, we are doing work on, we are doing updation of this, whatever the first Friday of the last month to this Friday of first Friday of this month, whatever new things has come, we will discuss each and every aspects of company law, SEBI law, and the RBI and insolvency. So join us at 4 o'clock next Friday. And till then, thank you very much. And we'll send the presentation to all participants. And I want to inform you also that anybody who wants to purchase this book, so they can write to Shivam, and they are giving 20%, but our speakers will get this book shortly. It is on the way, sir. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you.
Pawan.
Thank you.
Thank you, Nagpalji. Thank you, Nehal.
Thank you, Bindeshi.